Hi guys, this is Dee. Welcome to my channel. It's all about a guide to your investment. In this tutorial, you will learn about basic concepts of stock and how to do technical analysis of a stock. Watch till the end of this video to get more tips on how you can analyze a stock practically. So, what is a stock? When you Google search, you will see a definition for stocks something like this. Don't worry, I am not going to bore you like this. Just remember, stock is a fractional ownership of a corporation. We will get a better understanding of it as we move forward. Also, keep in mind whether we call it a stock or equity or share, they all mean the same. So, why do companies issue stock even though most of them have a $1 billion market cap? For a company to keep growing, they need money, more money. To get a huge sum of money, they can use one of the below options. They can borrow it by taking a loan from a bank or issuing bonds, which is debt financing. In this case, they are debt. They are in debt, meaning the company has to pay them back. The company can also raise money by issuing shares, which is equity financing. In this case, the shareholder becomes a financial owner of the company. Just like a small business owner, shareholders assume risk of the company not being successful. During liquidation, in debt financing, banks and bondholders are guaranteed to be paid off. Whereas in equity financing, shareholders will get money only after banks and bondholders. So then, why do we still buy stocks? Because we hope that one day the value of the share we purchased will increase. Think of Amazon. It's a share value like 5 years back was around $300. Now it's worth over a 1600. Just look at this picture. The share value of Amazon increasing tremendously in the last 5 years. Isn't it cool? Amazon is my favorite stock too, but it's very expensive now. Stocks are of three different types: common stock, preferred stock, different classes of stock. Let's talk about common stock. Majority of the stock is issued is in this form. A shareholder gets ownership in the company along with voting rights. Voting rights also varies by company. Shareholder usually receive dividend based on the profit earned by the company. With preferred stock, we get some degree of ownership in the company and also voting rights depends on the company. Unlike common stocks, here we get fixed dividends forever irrespective of the profit. In the event of liquidation, again, preferred shareholders are paid off before the common shareholder. The next one is different classes of stock. Companies can also customize their stock under different classes like Class A, Class B. They customize mainly to reserve the voting rights within the certain group. So, how do stocks trade? Let's say we have chosen to buy a common stock. Now, how do we buy it? Stocks are traded in physical locations like New York Stock Exchange, just like the one in this picture. Little crowdy. Um, You could rather trade stocks electronically just with a click of a button, and there are various platforms to do that too. We'll talk about that later. And now let's see what are the different types of traders. You can choose to be any of the below four types of traders. A day trader tends to buy and sell a stock within the same day based on few hours of analysis. A swing trader checks for daily charts before buying or selling. A position trader usually takes a day to a week before buying or selling. Whereas an investor is a patient guy who will even take months before buying or selling and will check on the company's fundamentals before making a decision, like Warren Buffett, a very patient and knowledgeable investor. So let's move on to stock analysis. How to know which is the best company to invest in? Below are the two types of analysis: fundamental analysis, where we study the company by itself, we read their financial statements, quarterly earnings, and performance. The next one is technical analysis, where the focus is on charts and graphs. Past stock price and volume patterns are the key to technical analysis. So, what's the myth about technical analysis? It's more like history tends to repeat itself. There are a number of patterns that historically recur. We will learn more about those patterns to watch out for. When you know the pattern before it is completed, then buy or sell accordingly to where the pattern indicates the stock is headed to gain profit. That's pretty lengthy though. All right, so the foundation of technical analysis, it's price action, which is based on supply and demand. If the business is strong, then price action is positive. If the price action is positive, then I need to be a buyer, right? And the next one is volume, the fuel that drives the stock. Now let's see about price action. When a stock changes direction, it forms what is called as pivot point. The chart here is of candlestick type. Red color indicates selling and blue is for buying. The pivot point is the highest candle of the pivot high or the lowest candle of the pivot low. Here, buyer's pressure is pushing the prices up, and in here, seller's pressure is pushing the prices down. Now, let's see about support and resistance. The low pivot in the stock is in general called as support, and the high pivot is called resistance. As in this picture, you can see the highest point the stock was able to reach is resistance, and the lowest point it went down is support. Now let's see about how they change, where the old support is the new, the old resistance is the new support. Let's say our resistance value here, or the highest value, is a $100. Every time we hit this 100, the stock goes down. But then buying pressure kicks in, causing the price to break the resistance level of 100 and we reach 200. Now, when there is active selling and as the prices reach 100, as in this scenario, we bounce back to a higher level. So 100 is the new support or the new low level. Similarly, you can see where the old support has become the new resistance. Old support being the new resistance is the opposite of the earlier scenario we just saw. Here, our old support or low level, for instance, was 50, which is the lowest we hit every time. But eventually, there was more selling pressure, causing the 50 to be the new resistance or the highest level. So, in the earlier scenario, we saw more buying pressure pushing the prices up. In this scenario, we are seeing more selling pressure pushing the price value down. Right. So, in this is a summary. Below are the topics we covered in this tutorial. In the upcoming tutorials or videos, we learn about trends and candlestick charts. So please subscribe to my channel and hit the bell button to get notification. Now let's watch how to check on a stock. I always use Yahoo Finance. Type in your stock name like Amazon, my all time favorite. Here I typed AMZN, which is the ticker symbol or stock symbol, and I hit enter. You can now click full screen. Here you can choose which day range you want to see, either a single day or week or a month or a year. The blue line is the price action and the bars below are the volume at each point. You can change the chart pattern from line to candle here, which we will cover in the upcoming tutorials. So that's it. So thanks for watching my video. Do give me a thumbs up if you like it and don't forget to subscribe. Thank you.